Good morning and welcome, wicked smart listeners. Thanks for joining me this week. This is Chris Pre again with another amazing episode. I was on this particular guest show and I said, why have you not been on our show with all your experience? So you're going to hear a great chat here. So as always, whether you're driving or sitting focused and listening, I encourage you to listen to some nuggets, listen to some action items, especially, and this is what the hearing date is. Yeah, you're gonna see this at about year end. This is super important for you to go, what action can I take? What nugget can I pull out of this to change the direction of my 2025? Especially if sitting in December of 24, you're not 100% satisfied and or not where you thought you'd be when you set your goals in January of 24. That's real simple. It's a gut check for you. If you have not checked out our apprentice program yet, we have one coming up in January. You could be in it. Go to smartrealestatecoach.com/apprentice-pod. When I say we have one coming up, we onboard every Monday, but we have it. One of the many things you get with the apprentice is an In the Trenches boot camp, hanging out with us right here in our conference room. Myself, one of our coaches, my son Nick, my son-in-law Zach, we're with you, knee to knee, elbow to elbow, making calls, making deals, and sending you home with some profitable things to dig into. That is absolutely the best thing we've done in all of 2024. Talk about constantly innovate and improve. Without much detail on that, because you're going to learn more about that on the website, buckle in while we bring you the next Wicked Smart Masters class. I get to hang out today with Derek Dombeck. And as I said, I was on Derek's show. He's been in the business 20 years, experience in general in real estate. Now, he's done deal structuring, wholesaling, flipping, landlording, lending, and managing numerous transactions. So again, when I was on his show, Generations of Wealth, I said, look, there's no reason why you shouldn't be on here. He runs a national mastermind group. He has an AREA. He has some amazing things going on. He also founded the Central Wisconsin Real Estate Investors Association, when I say REIA. So absolutely pivotal to some of the things going on in his particular market. I've been married for over 20 years, 3 kids, just an all-around awesome guy. You're going to love this chat. All right, Derek, with that as a background, welcome back to the show, buddy.
Thanks for having me back, Chris. We had a lot of fun the first time and looking forward to it.
Yeah, I just remember both times we talked on shows, yours and mine, it's just the creative stuff, there's no end to it. So it's always nice chatting, and then the Wicked Smart listeners get to hear it. So
absolutely.
Let's give them some context. For those of you guys that might be new to the show, Derek was on not too long ago, episode number 467, I think it was. But you can search his name, and you'll get that. And now that'll kind of bring it forward to today. We'll see what's going on here. So, Derek, what is going on in your world since we chatted? Like, what's going on for deals? And I'd love to hear your thoughts on the market.
Yeah, well, the market is where I am in the upper Midwest, Wisconsin area. It's still holding pretty strong. The average days on market is starting to extend out a little bit, but we're not seeing a lot of big market shifts like some parts of the country. Myself personally, my deals are going strong too. I've got some rehab projects that we're finishing up, a subdivision, which was a waterfront project that's finished up and on the market. And, you know, we're actually looking at expanding into more commercial moving forward as well. I think there's some opportunities starting to evolve there. And I love that space because that can be creative as well. And even more so.
Yeah, I want to dive there actually. So what would you say, right, in the last year, let's talk about 24. In the last year, what percentage, of your deals would you classify as creative? All of them like we do, or did you do some very conventional, some non?
I would say about 75% creative, 25% boring cash deals.
Okay. Boring cash deals. Yeah, the creative never gets old, right? Because you're always thinking through stuff.
Absolutely. And some of them are very creative. Some are just little bits and pieces, but I think that's the important part of having that tool in your toolbox is to know when to turn it on and when to turn it off.
Yeah, I said earlier today, Zach and I, my son-in-law and partner, were doing a kind of a year-end show, and I said the cool thing about creative is kind of what you alluded to, I think, and that is you can pivot with the market. Like you shouldn't be concerned about the market; you should just learn how to pivot with it, right? What are your thoughts there?
Yeah, 100%. And I've had people tell me, well, how do you find creative deals or how do you do creative deals? I think every deal should be a creative deal from the beginning, unless it proves to be a boring cash deal. And when
I
you
agree.
shift your mindset that way, you're always looking for the angle, and that's fine.
I agree. What if you look back on 24? I'm in look back mode because we literally just recorded a show looking back at 24. So you're gonna be dragged into that mix. So as you look back to 24, what was the I'll go two ways here. What was the most profitable deal and what was the most unique? And maybe they were the same. I don't know.
Well, the most profitable deal still stands to we'll see. It's on the market right now, and this is a waterfront property that was an estate. And when I bought the property, which was in April of 24, it was grandma's house. She passed away 2.5 years prior. They had started the probate, but the family was kind of in freak out mode, right? Nobody really wanted to deal with it. And so they got to a point where the state was saying, you have to close out this probate and start giving them deadlines. And so I was actually brought in by a real estate friend of mine, broker friend of mine, and I really didn't expect to get this transaction. She just wanted me to come up, meet with the family, give them some alternatives versus listing it. The property, well, Grandpa died in 1996,
Wow.
and I threw out his shaving cream. So you can imagine nothing was ever thrown away.
Yeah.
And they were, born in that depression era where you just don't throw anything away. So initially it was a 10-acre parcel with about somewhere in the neighborhood of 1,000 feet of water frontage. And when I was talking to the family, there was 2 heirs that were out of state, 2 heirs that were local. So the local ones, of course, have to deal with all the headaches. And the ones that are out of state typically think it's worth more than what it really is. And so my proposal to them was, number one, take what you want. I'll take care of the rest. And this property has a house, so the house is about 2,200 square feet, has a 30 by 40 3-stall garage, and then it had a log cabin that they built in the late 70s.
Wow.
And then they had animals, so they had horses and chickens and things like that. So they had about a 30 by 30 barn. And the way the buildings were laid out on the property, there was a chance. At that time, I didn't know for sure, but there was a chance that I could subdivide this property. And so I looked at it, purchasing it as if I couldn't subdivide it, right? We have to be able to profit no matter what. And the creative part came down to the grandson lives on an adjoining property, and he was very concerned with somebody building next to him. So we did a cash offer with those 2 heirs, the local heirs, carrying back $100,000 of their money on a note. And I was going to give David, the grandson, about 1.5 acres of land so that nobody could ever build next to him. So it wasn't uber creative, but it was what their big hangup was.
You solved for it.
Right. So we closed on the property. I brought in private funds for the purchase price, which was $400,000. Sellers are carrying back $100,000 of that, and I brought in a couple $100,000 for the renovation in private funds. So we did get approval to do the subdivision, rehabbed everything. We actually built an additional garage that goes with the cabin. So right now, the house and the main garage are on the market for $750,000. The cabin and the new garage at $400,000, and the barn with a buildable lot is at $180,000. So all in, cost of money, realtor commissions, carrying costs, everything, I'll be in at about $900,000, and we should sell somewhere in the 1.2 to 1.3 range, depending.
Nice. And that turnaround's what from the day the realtor called you out to help till I know you didn't close yet, but let's just say it closes in 60 or 90 days even. What's that look like for time?
Yeah, so we bought this April 1st, and we'd love to be under contract and closing this early in 2025. And the bad thing in Wisconsin, winter's coming, and it's not the prime time to sell waterfront property, but it is what it is. So
Yeah.
So I project that to be our most profitable deal this year. And then a couple other ones I actually bought a property last year in September 2023, and this one was all about relationships. A mortgage broker contacted me and asked me if I would give a short-term loan to his client to buy a house. His client was a first-time home buyer, and his client's neighbor was willing to sell him a house at 40 cents on the dollar because
Wow.
he had done all of the maintenance and upkeep for her for years, and she was going into an assisted living. And she wasn't going to get any of the benefits of the sale of proceeds anyways. So they were under contract for $70,000, as is worth $200,000, and with a little updating worth $240,000. Well, I told the mortgage broker, I said, I won't give your client a short-term loan because he's an owner-occupant, and I don't lend to owner-occupants. And on my commercial loans, it's going to be to house flippers and landlords. I said, but I would buy the property if she's willing to assign the contract. And at this point, when they called me, I think he had 8 days to close. So it had to happen pretty fast. So I bought it, and I gave him, his name is Anthony, I gave Anthony a lease with an option to purchase from me. He had a 1-year option. The first 6 months he could purchase at $20,000 over my cost. The second 6 months he could purchase for $30,000 over my cost. So he's still getting the lion's share of the equity in the home.
Yeah, you left some on the table for him. Yep.
I mean, $100,000, right? So I brought in private capital, and with that guy, I did a 2-year transaction, and I'm giving him 15% interest and 10% of the net proceeds at the time of sale.
Nice.
So this is a financial friend. By the way, I feel like you should always be very nosy with your financial friends and know what they have and, you know, what's in their retirement accounts. And I knew that this was, you know, a good deal for Mike. He's at, you know, 40% loan to value on the property. So long story short, Anthony was not able to buy the house from us. He had his year, September 15th came. And so we've got a contractor in there right now just doing some maintenance items, and it'll go on the market here in a couple of weeks. But that should go on the market at $240,000, and I'll be all in at about $90,000.
Nice. So nice one. I mean, didn't go the way to get to buy the finish line, but you capitalize on it. You have to.
Well, and the point of that is I really wanted Anthony to succeed.
Of course.
I've been happy to make $20,000 or $30,000 for pushing a little bit of paperwork. But the reality is he didn't do what he needed to do. He couldn't get funded, and we're going to make 6 figures. And that's a win-win deal.
Yeah, for sure.
It's safe for my investor. It's safe for everybody involved.
Did the buyer, the rent home buyer, the lease purchase buyer put anything down? Did he have skin in the game or no?
He didn't, because there was so much equity in place. I really wasn't worried about it.
Yeah.
And as he exited, he stuck me with a $650 water bill, and I'm still okay with that because
I was going to say, boo-hoo.
right. Yeah. I mean, it is what it is.
Okay, who wants to be the next apprentice? Pretty interesting, guys. We started this apprentice program back as a July 4th, 2024 promo. That's where it started. And it was so incredibly effective. We were just going to run it for the summer. It was so effective immediately. We kept it. It's in place now. And what is it? It allows you to get into the community, the Wicked Smart community, for less dollars than the QLS Home Study course sells for right now on our site. In fact, when you go to smartrealestatecoach.com/apprentice-pod, apprentice-pod, when you go there, you're going to see that as an apprentice, you're going to get over $13,000 worth of coaching, the possibility for you to touch base with us if you want to 4 or 5 times a week, and it doesn't exist anywhere out there, frankly. That's why we did it. We did it for 2 reasons. One, no one is giving you the support out there. We keep hearing feedback, which is how this was born, that other educators are not giving support. They're just selling stuff. So it doesn't exist anywhere, and nowhere in the real estate education or coaching space. And we want to help you do one thing, deals. So we've wrapped the support mechanism around this. We've allowed you to get into a Slack community with the other associates who previously were protected in Slack, and now you get to jump in there and experience that for 12 weeks. You also get to come to the In the Trenches boot camp, which is private. It's a chance to hang out with the family team and one of the coaches for 2.25 days in our conference room, roll up his sleeves, get calls done, get deals done. If you come with leads, you leave with deals. Absolutely incredible. I could go on and on. Go to the website right now. Check out more information about the apprentice, and I'm going to give you the In the Trenches Bootcamp site, because you don't have to become an apprentice. It just happens to be free with apprentice and associate. So 2 links I'm going to give you, super important. smartrealestatecoach.com/ITTB-pod. That's going to give you some information about the bootcamp. If you want to buy a ticket to the bootcamp, it's more expensive, but you can. Just to come check us out. About 1 or 2 people every time we run it do just that. Or become an apprentice, and it's for free. smartrealestatecoach.com/apprentice-pod.
So I have 2 questions that came out that you saw me scribbling notes. One, going all the way back to the land deal. As a wicked smart listener, I'll do this for you guys. Land is not usually our topics, but I love land, and I love the fact that Derek brought that up without being, we didn't talk before the show. We just always jump on and chat. I have a land course called the Hidden Profit Center. It's an older course, but it's 100% applicable today. If you email support@smartrealestatecoach.com, I'll give it to you for free. Just say you heard me and Derek on my show, and I said he could have it. Now, the team will love me, but we'll figure out how to get it to him. And then second, Derek, you said private funds. I'm just curious, is there a percentage of, or how do you calculate how much money you want to lend out privately? Because you said I'll lend to this type of like area. Or do you look at it that way, or do you just look at it on a deal-by-deal basis?
Well, I co-owned a hard money lending company for 10 years, and my business partner bought me out of that at the beginning of 2024. So back then it was very standardized. You know, we lent at between 12 and 13.5% and 3 to 4 points. Now, if I'm lending personally, I'm looking at deal by deal. And oftentimes I want to be involved in the transaction to where I'm getting a fixed rate of interest, but maybe part of the deal. So it's case by case.
Okay, got it. Good deal. Good answer. I love the part of the deal. Yeah, because you're more vested. If I was them, I think that's a good thing, even if they got to give up some.
Yeah, I mean, I've got deals out there where I'm paying 6 or 7% on a monthly basis, interest only, and giving people, 10, 15% of the equity. And I'm okay with that because I still cash flow today. And these are usually smaller IRAs. So like if I buy a property subject to, and this is probably going to happen this week on Friday, I've got a couple of duplexes that I'm going to, well, there's a longer story, but the short version is I bought one last year from this elderly woman, and I was supposed to buy her other 2 from her. They're all next to each other on the same street. And we closed on the first one. We put together the contracts for the second and third, and her grandson got involved and ultimately bought them from grandma. Well, lo and behold, he has now reached out to me to see if I would still be interested in buying those 2. And what I did with grandma was she carried back the financing. I gave her $10,000 down, and she's carrying paper for 10 years at 3.5% interest.
Wow.
And then I brought in, because these needed renovations. So yeah. I brought in private capital of $60,000. I'm paying that investor 6% interest only on a monthly basis, and he's got 10% of the equity someday in the future. This one's actually open-ended. We don't even have an end date.
And is that second investor? Because the owner, when I say second investor, the owner is in first. I'm assuming the investor's in second. He's okay with it because you have a nice spread.
Yeah, and that's really why I like the equity participation notes, because it's giving them that much more security.
Yeah.
But that property, we're all in at 190, and it's worth 265.
Yeah, no brainer.
Even in second position, there's a lot of meat on the bone.
Yeah, that's why I asked. What was I know everyone loves to talk about lead gen and the sources and will this work for me? Like, what was the source of that one there where the grandson ended up buying it? How'd you find that deal? And how'd you find some of these other deals? Like, talk about your lead sources a little bit, because that's a big question always.
Yeah, we do a lot of social media marketing, and so that's where that one came from. Facebook, I believe that was.
Yeah.
And it's pretty generic, actually. I mean, we go out on for sale by owner groups, buy sell groups. They might not even have anything to do with real estate. They might just be a men's group or a community group on Facebook.
Yeah.
And we put short little blurbs out there that say, I'm looking for a fixer upper house. And it starts conversations. And
Yeah.
I've got my team of VAs that monitor that 7 days a week. They're monitoring it on my personal account. This is not a business page. It's a personal account. And we have about 8 accounts that we're doing that with. So we're consistently putting that out. Other sources now, I have not really targeted real estate agents for many, many years. And now we've got an email campaign going out to every real estate agent in our state.
Well, good timing, right? Can you talk about that? Like you did that, I'm sure, because of the market. Am I right or no? Yeah.
Yeah, absolutely. I target specific areas when I see the average days on market start to extend out.
Yeah.
And that's when I was in the lending business, because we were lending throughout the entire state. And I did all of the valuations for the loans. So I always knew exactly what the average days on market was for each of these markets or cities. And that's what we're doing now is there certain areas that we're seeing 45 to 90 days for an average, where a year ago it was 10 days.
Yeah.
And those real estate agents that haven't quit, well, now they're definitely more willing to have conversations. And that's a long game. I mean, usually when they reach out to us, what the deal that they're calling us about really isn't a deal, but it's an introductory call for them to get to know us and know what we have going on. And that's when you start getting the pocket listings. Months down the road, this realtor, who I probably won't even remember, will call and say, "Yeah, we talked back in November, and can you help me with this problem?"
You planted a seed. Yep.
So that's a long game, but it'll bear fruit.
Love it. I'd like to sort of twist up here and ask you, I'm thinking of year-end stuff for people, right? And I always say to them, hey, are you where you thought you'd be? We're at year-end. And like, did you accomplish what you want? And if not, what the heck are you going to do next year? So how many years you been in the business? First, I think it's like 20-ish.
Yeah, I started in 2003.
Okay. So what would you say to someone who's unfortunately has jumped around to different niches? And because I get these calls weekly, Derek, I think you and I talk about like 3 or 4 times a week, sadly. Oh, I already spent all this money on courses and I didn't do any deals yet. So therefore, and they block themselves from going to something great, like something we have or you have. So what would you say to them? Like, I know what I say ad nauseum. What would you say to them?
Well, I get the same people that approach me at RIA meetings and on the phone as well. And the bottom line is it's consistency. And if you don't have the money because you went and spent your nest egg on courses, well, you should have the education now. So go and find somebody that you can bring value to with your knowledge and partner up with them. And maybe you don't get to keep 100% of the profits, but that's still way better than what you're doing right now. And I'm very involved. I do host a RIA as well, but there's 9 locations in our state that are all under one umbrella. And so I'm at 2 to 3 RIA meetings a month in different parts of the state. And it's the same message I give every time. You've got to be out there expanding your network and tell the world what you do. And they don't have to be in real estate. You should tell everybody, whether you're getting your hair cut or you're, paying for your gas, whatever it is, everybody should know what you do. And over time, that, again, bears fruit.
Yeah, you said something really key. Over time, that requires, if you're listening, that requires that you stay with it, right? It's crazy. This is not I like your opinion on this. It's not a try thing. In my opinion, if you try in real estate, you're going to be trying to dig wells, what I call digging wells all over the place, always different niches and never hitting water. So what are your thoughts on that? The try. Let me try it. Let me see if this works before I get committed.
I think that as a whole, our society is very much a quitter mentality society, and everybody wants everything easy and fast. And the reality is it doesn't work. Anybody that's been in this business for, well, let's just say through one market cycle at least, knows that. And there's going to be ups and downs. And when the markets shift, anybody that got into business for the last 5 years saw an appreciating market, and maybe it was harder to find deals, but when they found one, they made money. because you couldn't hardly not make money. But the sad part is people get comfortable and they stop their education. They honestly get a little big headed sometimes and think, I'm so good, when in reality, maybe you're not. And this is where I'm passionate about. Chris knows I actually do a negotiations training and put on events and host a mastermind. And I'm adamant that you need to learn how to talk to people. And that is every day, 7 days a week. Not, I made some calls on Monday and next week, Monday, I'll make some more calls. It's
Right.
It's literally every social interaction you ever have should somehow lead to what you do and what you can do to help people. And then it just happens.
Good stuff. Derek, before you forget, and then I'm going to ask you for some last thoughts that maybe I didn't ask because we could go forever as usual. How do these guys reach you? Anything you want to share? Anything at all?
Well, I'd love if you jump on my podcast, Generations of Wealth, which is at thegenerationsofwealth.com. And through that website, and you could find the podcast everywhere you find podcasts as well. But if you go to the website, there's contact information for myself, my team, anything that I can do to help you. Our negotiations stuff is out there, our trainings, and that's the easiest. Otherwise, you can certainly find me on Facebook, Derek Dombeck on Facebook, LinkedIn, TikTok, all the stuff.
Good stuff. Derek, what didn't I ask? Because I come, with some thoughts of mine and you come with some thoughts. This could be something, a nugget or two that I didn't ask or something you want to share. It's up to you as we wrap up.
Well, I love that you asked me that question because I do the same thing with my guests. What's coming in 2025? And I'm excited about the election results that we just had. I think it's going to put some turmoil in the market. And I don't think we're going to see a big drop in interest rates. Some people are already saying that we are, but I don't want to see a big drop in interest rates personally. I like a steady, even keel rate. I wouldn't mind seeing them at 5.5 for 30-year fixed loans, but we don't need to go below 5. That's going to throw too much turmoil back into the market. And I think that for those of us that have been around for a long time, or those of you that are newer that are eager to learn and expand your businesses, I think 2025 is going to be a really fantastic opportunity year.
I love it and couldn't agree more with everything you said, election and interest rates. And that should, I hope, if you're listening, actually get you excited about 2 ways to buy, which Derek and I talk about all the time. I love free and clear because we structure principal only payments. That's 0% interest, guys. And I love finding sub-2 deals as recent as this week at like 2.6% that you probably won't see those rates. I hope Derek's spot on because you can go back and find these and buy them sub-2. So good stuff, Derek. As always, I hope we keep volleying our shows back and forth. It's always great to have you on, and we could talk deals. Even if we went on next week, there'd be new deals for both of us to talk about. So it's good stuff. I appreciate you being on as always.
Thanks for having me back, Chris. Look forward to the next time.
You bet. Okay, Wicked Smart listeners, that does wrap up our time together with Mr. Derek. Listen, if you enjoyed the show at any level, I always ask you one favor. Take a few seconds and rate it and review it, and then share it with some others. I want to help as many people who are committed and serious to change their 2025. I gave you the link earlier for the apprentice program. I assumptively am thinking always, right? I'm a little biased. I think every single person on the planet has our QLS home study course, the Quantum Leap course, because frankly, it's the best thing out there. It's the most robust online course that evolves, changes, updates, and you own it for life. I would encourage you to go look at that's all about if you don't have that yet. I can't imagine why you don't, but if you don't, get your butt into that platform right now for 2025 would be my suggestion, guys, if you want the best outcome. It comes free with the apprentice, but if you haven't seen it yet, go to smartrealestatecoach.com/PCQLS. Again, it's free with the apprentice program, but if you want to just take a peek at that, it's all yours.
Hey guys, are you simply sick of juggling a dozen different software tools for your real estate business? I know I was, and I know I'm not a tech person, so it was frustrating. A subscription for this, you got a subscription for that, and they don't even work together out of the box. That's very frustrating, especially in the real estate world where your best time spent is going to be out in the field or on the phone with sellers. and now you're stuck hiring a tech guru just to make all that sync up. So let's ditch the chaos and let REI Black Book handle everything. Automate your lead follow-up, track every deal, analyze things quickly for you, make offers all on one platform. In fact, with the Wicked Smart platform, we now have access, if you're in the Wicked Smart community, to all the other associates' properties. Can you imagine that? So you're brand new in the business perhaps, and your seller looks on your website and sees 20, 30, 40 properties, instant credibility. So you're going to get everything on REI Black Book, from our custom workflows for lead generation all the way to closing. It has it covered. Try it today for just $1, guys. Visit smartrealestatecoach.com/REIBB-DD. smartrealestatecoach.com/REI, B as in boy, B as in boy, hyphen, D as in dog, D as in dog.
Thanks for listening to the Smart Real Estate Coach podcast. If you're ready to invest in yourself and take your investing to the next level, check out our 90-day Jumpstart program by going to smartrealestatecoach.com/jump. That's smartrealestatecoach.com/jump, because now is the time to act boldly in this unprecedented market shift.